Microsoft's sudden AI dominance is scrambling Silicon Valley's power structure. The company has quietly cornered the emerging software market, and it's preparing to cash in. There are two ways of looking at ChatGPT, the artificial intelligence chatbot that hundreds of millions of people have tried out since its release late last year. One view, preferred by many politicians and journalists as well as the company that created the app, is that its release was an historic development on par with the Industrial Revolution, or, more troublingly, the atomic bomb. OpenAI's co-founder, Sam Altman, has warned that future versions of the underlying software, a large language model known as GPT-4, could wipe out the human race. The other way to look at ChatGPT is as a vehicle for viral hype. Play around with the software for a few minutes, and it's obvious that the potential for Armageddon has its limits. The app struggles with middle school math, can't tell you what happened last week and is basically the machine equivalent of a compulsive liar. But it's already true that the software is beyond Altman's power to fully control. Microsoft Corp., not OpenAI, owns the mega computers that enable the chatbot to compose a sonnet about your cat or write a thank you note to your uncle. Microsoft is OpenAI's largest shareholder, its biggest financial backer and its key technology partner. And to a great extent, it's Microsoft that now has the responsibility of turning ChatGPT's buzz into a real business. Although OpenAI is hands down the hottest startup in Silicon Valley, in many ways it feels more like the most promising subsidiary of the leading purveyor of productivity software. Microsoft didn't rate in the public AI discourse one short year ago, when we were all watching Top Gun, Maverick and listening to Sam Bankman-Fried. Back then most of the hand-waving on the subject was aimed in the general direction of Google, where researchers first developed the technologies behind ChatGPT and its peers. But while Google initially kept its research away from commercial products, especially its flagship search engine, Microsoft is focused on using OpenAI's innovations to make a buttload of money ASAP. The company's GitHub Copilot tool, which suggests new lines of code to computer programmers, was its first paid offering and has attracted more than 10,000 companies as customers. Bing, Microsoft's also-ran search engine, came next, with a chatbot search engine that can create vacation itineraries and shopping lists. Over the past several months, the company plans to incorporate other copilots into Windows, where they'll rewrite, summarize and explain content, and its Microsoft 365 Office suite, where they'll create slide decks in PowerPoint, sift through emails in Outlook and make charts based on Excel data. There's no point in hyping technology for technology's sake. All of these technology shifts are only useful if they do something in the real world. Nadella's team hasn't disclosed pricing on the forthcoming copilots, but they definitely won't be free. GitHub's version starts at $10 per user per month, and copilots for Microsoft's Office apps could be similarly priced, translating into as much as $48 billion in extra annual revenue within the next 4 years, according to Kirk Materne, an analyst with Evercore ISI. In a research note published on June 2, he estimated that Microsoft's revenue from OpenAI-powered features could hit $99 billion by 2027. That would be like adding 3 Netflixes to the top line of the world's second most valuable public company. Little wonder, then, that Microsoft has invested $13 billion in OpenAI since 2019, according to people familiar with the partnership, that its share price has shot up 30% since ChatGPT's unveiling, or that it's become the unlikely AI tech giant to beat. The clear leader, says Kim Forrest, Chief Investment Officer and founder of Bouquet Capital Partners LLC, an investment firm. Google just got completely leapfrogged. Microsoft executives are understandably excited to be associated with the cutting edge of anything. It's been a minute, as their cultural reference points show. This is a little bit like the Windows 95 moment, says Scott Guthrie, one of the company's executive vice presidents. People lined up at Best Buy at midnight to buy it. This time, Guthrie says, his inbox is packed with requests from CEOs asking for access to early versions of the corporate copilots. This tracks with the comparison to Windows 95, which was less a technological breakthrough than a sublime expression of corporate dominance. For more than a decade after its release, Microsoft owned the central platform for personal computing software. That the company's practices led to an antitrust settlement with the U.S. government did little to hamper its long-term prospects. Now the house that Gates built is making a similar bet on what looks like the next big platform. The idea is simple. Bring AI to everything, then cash in. Microsoft was working on AI software before Windows 95 ever crashed its first PC, but for decades, every major attempt fell victim to risk aversion or corporate goofiness. For Exhibit A, see Clippy, the mansplaining late 90s fastener that interrupted your work to blink its gigantic eyes and ask questions such as, "It looks like you're writing a letter. Would you like help?" In 2016 came Tay, a bot that was supposed to learn to sound like a teenage girl by chatting with people on Twitter. Somehow, Microsoft's engineers failed to appreciate how Twitter tends to work. Within 24 hours, a deluge of rhetoric from neo-Nazis and September 11 truthers turned Tay into a red-pilled, anti-Semitic troll. The company took her offline, never to return. In between, most of Microsoft's AI output consisted of academic papers. We had a whole bunch of smart people who were doing a set of small, interesting things, but that wasn't necessarily adding up to one thing. Scott, a big guy with a Van Dyke beard and a collection of Hawaiian shirts, grew up in Virginia's Appalachian foothills and attended the nearby University of Lynchburg, a small Christian college. He got a job at Google, rose to become a top engineer, then jumped over to LinkedIn, which Microsoft acquired in 2016. Shortly after the deal closed, Nadella appointed him CTO and charged him with streamlining the company's AI sprawl. At the time, Microsoft had at least 3 divisions conducting AI research under different bosses. Scott tallied all the requests for graphics processing units from the different teams and got a number that was as big as the company's entire capital budget for the year, then about $10 billion. Just some preposterous number, he says. These were great projects individually, but they had no bearing on one another. None of them had a business plan. Starting in 2019, he took responsibility for all AI research and development. Any project that needed AI chips required his approval. By then the 3 big companies in the field were Baidu, Google and OpenAI, says Vinod Khosla, an early OpenAI investor and co-founder of Sun Microsystems. Google's advantages included its leading research subsidiary, DeepMind, and its driverless car technology. Baidu Inc., the creator of China's leading search engine, had similar strengths. OpenAI, founded by Altman and Elon Musk, was the odd one out. Its demos were promising, but it didn't have the money to keep pace. What OpenAI needed was a partner, partly just to pay for more graphics chips. What Microsoft needed was some way to catch up with Google. That's all for today, guys. If you found this information useful, don't forget to like, share, and subscribe to our channel. Here's to your financial passive income journey 777 freedom. At Passive Income Journey 777.